All right. Well, let's get it back on. Welcome back to the Family Banking Podcast. I'm Chuck.
I'm John.
All right. Well, welcome. Welcome to episodes 5 and 6 for Family Banking Podcast. That's what we called it, Family Banking.
Private family banking.
Private family banking.
It's family and private.
That's very private, very family, very long-term. You got to change your mindset, right? It's long-term. Nelson Nash said, think a couple generations ahead. You know, Nelson Nash said a lot of good things. He was the originator of the infinite banking concept. And IBC, known more broadly, we call it private family banking or family banking. And one of the things he said was that you need to be in two businesses. You need to be in the business of what you do for a living, and you need to be in the banking business. And we all do banking. You know, The truth is everybody banks. The question is, how do you bank? And when we say that, we mean, how do you get control of your money? How do you get control of your capital and utilize it and get the advantage of utilizing that capital? Right. I was telling you, the other thing is, when you come on this journey as an agent, we like to recruit agents. John's recruiting agents. I'm recruiting agents. You can sleep better at night because you're not gambling with other people's money. Right. And that's basically what a stockbroker is doing. They get a fixed fee or fee for service, whatever they call it, 1.5 to 1.5% of the account value, no matter whether they trade you up or down or you lose money or they're buying options or puts and calls and that kind of thing. And whether you make money or not, they're still making money on your account. And if you stay with them for 20 years, they've made money every year for 20 years because they're not dependent upon the market going up or down. And so we don't do that. And but what we do service people with is a methodology which will guarantee they never lose their principal. Right. And that they're not playing directly in the stock market. Right. And so they have a great ability for them to be peaceful about it and be happy about it and be prosperous, and for us to know we're not going to hurt people by losing their money. You know, Warren Buffett, famous guy, stock market guy, of course, of all kinds, but he said the first rule of money is don't lose money, right? So that's what we can bring to the table. But tell us a little bit, John. Yeah. By way of introduction, this is my son, Jonathan, and he's just got his life insurance license, the state of Texas, and so how do you go about that? What do you have to do? What do you have to do? I'm going to grab
We're
my
in the great
coffee
state of
over
Texas.
Here.
So just recently, I was able to go online and find a course and a book for, and it was AD Banker is the company vendor that I was getting the course material from. So I was able to go on there and ask which state you're in, so they can give you the state laws book along with the other course material. So I ordered that in, and I studied pretty good for about 2 weeks, and I took some time off and got busy with life or whatever, and then continued to keep on doing that. And that study material provided practice tests, which were really nice. I read through the book.
What's the cost of the course, roughly?
I think it was like $150. So not 180 bucks.
Not going to break the bank.
No, not bad. So I got that, and then after a while, I felt like I needed to just get it over with. So I did pretty much about a week and a half of intense study every evening after work, and I took the test. You had to go to a Pearson VUE test center. I don't know what it's like in other states, but I'm assuming there's just other test centers as well, but that's the one I happen to use.
Is it a 70 or 75 to pass?
It's a 70, I think.
Okay.
Yeah. The practice test you had to get a 75 or greater on the practice. Mm-hmm. So I did that.
How many questions?
It's 145 total. So I think I had 35 state tests.
Oh, okay. State-specific
state-specific law and stuff. And then I think I had whatever the balance of 35 out of 145.
About the product. Yeah.
About the product. Just general insurance product knowledge. So
and life insurance specifically. Yeah.
Right.
Oh, you took life and health, though.
Yeah, I took life and health. Yeah.
Okay.
So
you don't have to do that.
No.
You can just
sell the whole life or term or something like that, I assume, you just
do life
that
only.
Separate. Yeah, life only. So anyways, I was able to do that, get that done, and then once you do that, you go to the state website, which refers you to a third-party website where you file with the state. And then
sounds bureaucratic.
Yeah, very bureaucratic. So then I was able to do that.
And you have to do what?
And then give them your social and then fingerprinting,
Fingerprinting, and that's the third party.
and
Background
check too.
Yeah.
Fingerprinting and background. So you got to go to another third party company, do that. Once you do that, then you can submit all that, and then the state approves you. I think you can do it multiple ways. You can do one and then do the other, as in, I don't know if it has to be in consecutive order, but all the pieces have to come together to be approved. So then once you do that, then you need to get to sign up with an agency. You have to get errors and omissions.
E&O insurance. So
then
there's
when I
lots
did
of
that,
vendors that do that.
Yeah,
You
so
do that
I was able
online.
to get that online.
What was
It
the
took
cost on that?
me like $380.
$380, about
Yeah.
$400.
Yeah.
So now you're into it for like $550, $500,
Yeah.
something like that.
And then
You have to get appointed.
I had to get my license printed off from the state, and so I had to pay another $15 for that, I think. And then
Nice.
I don't know if I had to pay for it, but I did anyway. So, and then what else? Oh, and then I had to have my anti-money laundering
Anti-money laundering.
course, and that cost
Yeah.
another
AML.
$40 or $38.
Yeah, that's for all the
Yeah.
Patriot Act terrorist stuff.
That was required by the
Insurance carrier,
insurance
the
company, not the state. So you
Right,
don't have to
right.
have that. But again, it's a cost.
If you're going to
probably
get
gonna have to-
appointed, yeah,
Yeah.
most carriers make you take
Yeah.
that. Yeah, I think they all.
And I think that accounts to the credit hours you have to have in the 2 years. So like, it
Yeah,
gives
you get a little
I
bit
think
of
I got 4 credit
for
hours
credits
for that.
towards your continuing
So,
ed.
You were going to have to do some sort of credit hours to begin with anyway. So
So I think
it's-
continuing ed, it's a 2-year period. To
right,
get it
you
done.
have 2 hours,
Yeah,
2 years. I mean,
2 years.
Yeah.
Yeah,
I think it's 24 credit
20
hours,
for
right?
Credit hours. Yeah.
Yeah.
And you can get those courses through any number of sources.
Right.
Yeah.
So, anyways, I'm in the process of waiting on the approval of the carrier and whatnot.
So you have to go through a general agent
Right,
to get approved.
Yeah,
so
I think that's what it is.
So
yeah.
Private Family Banking is our general
Right.
agency, and then we're going to submit your stuff to the carrier or carriers
Right,
and get you appointed with the carriers.
right.
So you have to go through
Gotcha.
somebody who has a general agency status.
Yeah.
Yeah.
Yeah,
Great.
so
Wow.
I am really pushing
ready
through.
to rock and
It's
roll.
a lot, but nothing that you can't overcome. But a lot of it doesn't actually seem to be very clear. And if you have somebody who's already done it, it's a good
Helpful.
place to start. So Dad was helpful in that.
Good.
But yeah,
Although it's been a
that's
few
kinda my
years. I
journey.
mean, it's been a while. I could
Yeah,
hardly
I mean,
remember.
I mean, you helped
the
a little
agony
bit,
of it,
but
yeah.
it's kind of if you haven't recently done it, you're going to be a little.
Yeah.
It's
Off
a
your
lot
step.
of buttons and
Yeah.
calling just to verify stuff like
Yeah.
that.
Yeah.
So yeah, that's kind of my journey. I would say that it's not super difficult, but you're going to need to be determined to do it because it's not there for the taking necessarily super easy.
Yeah. So as I mentioned, we will sell you term life insurance if that's the fit for you, and you need a backstop for the value of your
Right.
human life. By all means, if you're the breadwinner, at least get some term life insurance. But the crux of our business is teaching people how to do private family banking and using a dividend-paying whole life insurance policy with a mutual insurance company to do that, and to, and sometimes front load that policy to get it really going and
Right.
put a big cash dump in if they
Right.
can. And so John has been thinking of all the people he knows, of course, and trying to, like I do, talk about this at the right time in a right way and not
Right.
try to always be pushing people. But you tell us a little bit. So you had some experience talking to people, and
Yeah.
people have questions, don't
Yeah.
they?
I mean, I think I've already had a policy for 4 or 5 years,
Yeah.
I think now, so it's
Helpful.
not necessarily a foreign concept. But if you're going to try to sell it to people and benefit them, and as in a way that has benefited you, it does stretch you to understand the full concept of using whole life as a banking system.
And that
Yeah.
said, we require at Private Family Banking that if you're going to work with us, that you do have
Right.
your own
You
policy.
need to be, yeah.
At least have one policy so
Exactly.
that you can practice what you're preaching.
Yeah, I know. I think Grant Cardone said something that if you're going to be a car salesman, then you need to buy all the unlimited services that they offer to you. Because if you're not willing to buy them, then how can you sell it to someone as
There you
an
go.
offering? So
There you go.
you
That's
don't
a
have one.
Grant
Yeah,
Cardone.
So I think there's some good truth to that.
Yeah.
But I think in the same way, yeah, if you're going to sell this, if you're going to push someone, not push, you're going to advise someone that this is a good option, then you need to be willing to do it yourself.
Right.
If you're going to sell it in a, a very truthful way, so to speak. But yeah,
well,
I
think it's just like anything, if you're a grass expert, cutting grass or treating grass or growing grass, you better have some grass of your own.
Right.
You know, and don't smoke it.
Yeah. No.
Anyway, and just get out, roll out the carpet, and go ahead and be. In other words, you sort of got to live and breathe it a little bit.
Right.
And you got to. I think you have to be good about this, not just for the sake of selling policies, but to make the point. You have to be excited about it and feel good about it.
You have to feel like that's the right
thing to do. Yeah. And we say not everybody's a candidate.
No.
I think that there are some people that need to take care of their debts, although we can help people do a very different kind of debt snowball than you might have heard about from the likes of Dave Ramsey and others. But we do a debt snowball using a policy. We call it a debt acceleration payoff plan. And we give you a month-by-month schedule of what to pay off and use the policy to do it, which accelerates that and gives you earnings on your money while you're reducing debt. So you get a double bank there. So, and the last episode, John, we began to talk a little bit about policy design. I wanted to take that back up in a little bit, but I just thought we would start at sort of the 50,000 foot level and say the biggest idea here in private family banking is preserving your capital. And as I said, like Warren Buffett, never losing money, never going back. Just that alone is a huge benefit. So when John started his policy, he wasn't an agent. He was learning. He was just getting ready in his business, and he was saving money, and he had some money saved up. And so he capitalized his policy, and you've used it now at least 2 major times, right?
Yeah, I guess
used
2 or 3 major times. Yeah, so I bought a piece of property, did that, built a house on it, sold it, was able to pay the loan back from borrowing it against my life cash value on my policy. Hopefully people understand what that means. We can get better.
Yeah, let's talk about that. I think
we need to kind of talk about what is a whole life. What's a whole life policy sold by private family banking? What's the key, 4 key principles or abilities?
Yeah. So if we were going to talk about that, so the first big idea is to preserve capital. How do we do that? Well, in a policy designed for quote-unquote banking. Now let's talk about banking. Banking is just the process of money running through your life, paying bills, acquiring things, building a business, paying a mortgage, whatever. Money's going to come through your life and you're going to do banking. So the first thing we want to do, instead of flowing the money into a regular bank and a checking account only and letting it sit there, we're going to flow it through an account and into this new account that was based on a policy we call a high cash value whole life insurance policy. So whole life insurance is a way to build cash and have that money capital available to you for the rest of your life, where a term insurance policy is just that. It's only good for 10, 20, 30 years of a term meaning the term of the policy, a life cycle. And at 30 years, the most you can buy, it ends. And if you don't die, you get nothing. All the premiums you pay, although they're smaller, our policies are going to cost you more per month, or you're going to put more money in, but a portion of your money is kind of threefold. 1, it's going to pure whole life insurance. 2, some is buying a term insurance rider that we use to build the size of the bank. And 3, we encourage you to do what are called optional but very critical paid up additions. So there's 3 components to that premium: base whole life, there's a term life rider, and then paid up additions or level LPUAs or PUAs, paid up additions. What you're doing there with the third component is you're buying little pieces of life insurance and adding some cash to it, and that makes you be able to build your cash pile bigger, faster. And so why would you do that? Well, we all want to try to save money, and we all want to try to avoid paying interest. This way, even if you're not going to we're going to encourage you not to liquidate the account. That's the big mental shift change. So talk about that first piece of property. So you had about 20, 25, 23,000, I think you started your policy with. And so you put that in, and it gave you approximately like 20,000, I think.
Right.
of which you went and bought a piece of land.
Right.
It happened to be just the right time. We couldn't
Right.
find land at that price today,
Yeah.
but
yeah.
you did.
No, yeah. So we bought the
So you were a
land.
cash buyer
I was a cash buyer
in the eyes of the seller.
in the eyes
But you
of the
actually borrowed money against $25,000. Here, you borrowed about $23,000, as I remember,
seller. Something like that.
and you bought the land. Now
Right.
you have $25,000 in your policy, and you had a piece of paid-off land. And then we went where? What did we do with that? We went to a regular bank
Right.
to get a
construction
loan.
regular construction
Right.
loan from a bank.
From a bank.
Obviously, yeah.
But you had equity
right.
in the property. So
It was a clear title.
Clear title.
basically.
Yeah.
That's what you would
awesome.
call that. So,
Awesome.
Yeah.
Which is a lot easier to go to a bank and get a construction loan when you own the property.
Right.
Paid for.
Right.
Use it
right.
as collateral.
You can use it as collateral. That's
In
what
the
we did.
meantime, you set yourself up to pay that loan back at about 5 to 5.5%. I can't remember what the interest rate was, and you wanted to pay that back on a routinized basis. So
right,
you
can
put a
set
little
up
extra money.
Yeah, you can set up an
every
auto
month.
payment every month.
Yeah.
If you wanted to pay it down, or you could wait at the end of the year to pay off the interest.
Right.
You could do that.
And so the way the policies are designed, if you didn't pay a $20,000 loan off at the end of the year, what would happen?
They would take it away from the remainder cash value in the policy. Yeah.
And then if you've paid a payment, a premium payment every month, part of that premium is adding to the cash value during that year.
Right. You're
so
already
at the end
adding,
of the year,
yeah.
you're going to have enough extra cash value if you want to absorb the compounded interest
Right.
and roll it into the loan.
Right.
Let's use 5%. A $20,000 loan at 5% would be $1,000.
Right.
So at the end of year one, you'd have a $21,000 loan.
Right.
And you just roll forward.
Yeah. If you didn't happen to have the cash to do that.
Yeah, to pay the loan down. And,
Right.
And there's nothing wrong with that.
No.
Eventually, you want to pay that loan back. But if you want flexibility and
Right.
you have other options that you're working on, or you're cash strapped, or maybe
Right.
you have your money tied up in a project or whatever, you might have to do that.
Right.
It's not the end of the world.
Yeah. I think one thing to think about is what's a lot about why do I take a loan out against it, and should I, and the value of the policy is that you're creating more flexibility in your life by having a whole life policy. That's the root. Why would you do this compared to a cash buyer?
Well, you're also getting a death benefit.
You're getting
too.
a death benefit, but like the core principle is you are trying to be as much like a bank as possible without having to be regulated and have the storefront,
$20 million in assets,
yeah,
or whatever it is. Yeah.
whatever the regulations have to be in your state. But ultimately, the more you can act like a bank, the more you're going to be able to succeed in the financial realm. So
kind of
yeah,
blowing that up big
Right.
again, this idea of private, we're kind of going through that. You own it.
right,
So you actually have a contract. That contract, we like to call it the and asset. The contract allows you to have a death benefit if you died prematurely or later in life. You have it for your entire life.
Right.
And it builds cash value, which is an asset category, like equity in a house.
Mhm.
And you can borrow against that at any time for
Right.
any reason without approval. And you have a guaranteed interest rate cap of 8%. And your money's going to compound tax-free.
right,
And it's going to be protected from lawsuits.
right,
And so thus the kind
Right.
of the and asset. A friend of ours,
Right.
Caleb Gilliams, wrote a book called The And Asset.
right,
I recommend it. It's a good little read. But we do that too. I have my own book. We have books in our bailiwick of private family banking. But that is what it does. It really augments what you can do and get. And when John mentions flexibility, there's also flexibility. I mean, you set yourself up for a monthly premium, but if you needed to reduce that, you can even take that down to it.
right,
If you do a loan and you can't pay the loan back, you can wait. I showed a guy last week. He wanted to know how long he could wait. Well, I extended his loans out 10 years. And because he capitalized it so strongly in the beginning, he was able to wait over 10 years without making a loan payment or interest at all and just kept rolling it over. Now, he probably won't do that. But
right.
he wanted to know how much flexibility.
How much flexibility does
Which is
it have?
great.
Yeah.
Fantastic.
I think that, so why is a whole life policy? I think I want, what we could drill down is, why is this a good idea? Well, I think if you, ultimately, what's the purpose of money? Well, it's, you got to live, right? And then the second thing is, okay, if you're already paying for what you're doing, you're also creating an inheritance. So how can you preserve that inheritance?
Right.
And the question is, why don't I buy gold bullion? Why don't I go buy I don't know, stocks. Why don't I go buy
Mhm.
a lot of your life? You want to make sure that you can pass it on to your loved ones and not being taxed to death either.
Right.
So
you're
there's a
kind
really
of pointing out two key components. And so, as we like to ask, the question in economics is always compared to what?
compared to
So
what? Yeah.
why would you do a high cash value whole life insurance policy? Well, compared to what?
Right.
Compared to putting the money under your mattress, probably
Right.
not a good idea. Compared to putting your money in a bank, we know that's not a good idea. I hope you know that, listeners. Thirdly, you could play the market, but what are you exposing yourself to? Market volatility.
Right.
What if you put it in real estate and a real estate market crash? So real estate's not always perfect. We like
Right.
real estate. Don't get me wrong, but it's not as liquid, right? If you go
Right.
buy a rent house and you're making net $200 a month, and you've
Right.
got $100,000 tied up in the rent house,
Yeah.
how far is that $200 a month going?
Right. Yeah.
You'd have to have 20 rent houses to even make
Yeah. Make
whatever
it
it
worth
is,
your passive
$4,000 a month.
income. Yeah.
at $200 net profit. Right now, some of them are lucrative to that, but
Right.
actually the rent market is so packed with buyers that the net rental, because the prices are going up, and if they can rent them
Mhm.
cash positive, is $200 is maybe little slim, but you're not going to make $1,000 net a month unless you're
On
maybe
one
a
home.
vacation property on one home.
Yeah.
Maybe you
Yeah.
do a VRBO rental, and then you have to fight. Are you
Right.
going to get the rentals that you need?
Yeah. Keep on trying to do these podcasts for you. But if you guys know any more, have any more questions for us, feel free to email Dad. His email's all over the place.
Yeah, banking at privatefamilybanking.com will work.
And we'd love to hear some questions and talk about them.
Absolutely.
Because that's that helps us give some talking points and give you guys some good stuff to chew on and understand. Any other thoughts before we close?
Yeah,
here?
I think I'd like to just say we have a growing community of well over 100 people, I think almost 120 now. Not everybody comes to my quarterly meeting, but I have an online Zoom quarterly meeting, and I invite guest speakers. We've had one of our clients or one of our members of our community is a real estate syndicate owner,
Oh, there you go.
and he's looking for investors, and that the entry point is pretty good. I have people, and I'm looking at this maybe first quarter next year. I'm going to buy into an Amazon business. We have several pastors in our team of clients that are in an Amazon business where it's a hands-off. You're more of an investor.
Mm-hmm.
I have a third opportunity for a for-profit company that if you're interested in that, you get involved. If you get a policy, you have one of the conditions is you have to have a policy, and there's lots of ways to leverage your policy into a for-profit company that we hope to see grow big and to multiply as it already is. So there's many opportunities, well, let alone some of my individual clients are loaning money to one another for business opportunities up to over $100,000, not small change,
Right.
and down to $20,000, a little smaller. And so those things are happening. And this
Right.
community's been together now just over a year and a half. So things are really booming. We're growing every week. I get
Right.
try to talk to people mostly every day. And I'm pretty available from 6 a.m. Central Time or 7 a.m. Central Time to 9 p.m. Central Time. And it's banking at privatefamilybanking.com. And you can certainly catch me there, and I'll hook you up with a meeting calendar. And
Yeah.
John will be getting his calendar going.
Yeah.
And he'll be taking appointments.
Hopefully in
too.
another month or so,
Yeah,
probably.
And we're doing, I'll just do a
Yeah.
shout out. We're doing a Fight, Laugh, Feast Cross Politic
Yeah.
Conference.
See us there.
Come and see us there in Fort Worth. We'll be there in Fort Worth at the Will Rogers Center in downtown Fort Worth, October 31st through November 2nd. We'll be there. We'll have the whole team there. John will be there. My two guys out of California will be there, and we'll be having a lot of fun at the booth, some games and fun for the kids. We'll be having giving away a Byrna, which is a non-lethal projectile stun gun kind of
Weapon.
thing for non-lethal, not required to have a license, but it's self-protection item called a Byrna, B-Y-R-N-A, Byrna. And it's really cool. I saw a police officer with it at a wedding we were at on Saturday. She had a Byrna.
Yeah.
She said she can knock some people down with that if she
Wow.
needs to. So,
That's pretty cool.
yeah. Anyway,
You
so
could too.
yeah, you could too. And then we'll be at the conference in April for Joel Webben, Pastor Joel Webben and Right Response Ministries. That'll be here in What's the name of the town?
Georgetown?
Not north of Georgetown. Temple, Texas. Yeah, we'll be there in April. I think it's early April, so we'll get some word out about that. But we thank you for listening.
Yes.
That's again banking at privatefamilybanking.com. Give me an email and we'll chat. We'll get on the calendar and go through the numbers in your life.
All righty.
All right, John.